What's up, millennials? So in this video, what I'm going to do is I'm going to give you the exact fair value of Luminar, which is the company that's going to be acquired by the SPAC Gores Metropoulos, which so far is trading under the ticker symbol GMHI. 1 week ago, I actually made a video about GMHI with some technical analysis, and in that video I said that it might actually be a good moment to buy the stock. And a few days later, the price actually has gone up a lot. But today I'm going to show you that we might even go up quite a bit further. Now, before we start, I would like to say a few things first. First of all, I'm not a financial advisor, so this is not financial advice. This is just like a collection of my thoughts, my calculations and everything, but it's not something that you should trust. You shouldn't trust me, you should verify me. Secondly, in this video, I'm going to do some calculations which I have already done before for a company called Switchback Energy, which is the SPAC that's going to acquire ChargePoint. So you might want to check out that video first so you know more or less what kind of calculations we're going to do, and you might also want to read the articles in the source description of that video instead. And then third, there has also been a cover story from Forbes about SPACs in which Gores Metropoulos, the company that's going to acquire Luminar, is also mentioned. So I'd like to encourage you to read that article from Forbes because it contains a lot of information, a lot of important information about SPACs and also about Gores Metropoulos. And lastly, this might become a long and maybe boring video as well, but I do believe that it's very important for you to exactly understand how I reach the fair value of Luminar. So make sure you're concentrated, make sure you're not like folding clothes or doing the dishes or anything, and maybe just like me, maybe just grab a Red Bull just to keep concentrated a little bit more. Cool, with that being said, let's get started. Okay, so we're going to do this explanation in 7 steps. This is going to be step number 1, which is going to be to calculate the pro forma market cap. And just a little side note over here, because this is a presentation that I used that was published in August instead of November. So I believe the last presentation of November is actually on the website of Luminar, but for this one I'm actually using a presentation from August because it contains a little bit more information that we are going to use today for our calculations. Another little side note is that the image quality seems a little bit lower than the other one, the other presentation, but yeah, I couldn't really find a better image quality for this presentation from August 2020. Now, as I've said, first we're going to do the pro forma market cap. We're going to calculate the pro forma market cap. And that is a relatively easy step. There are going to be a little bit more difficult steps on our road today. So the pro forma market cap is basically the market cap post-merger, so after the merger, based on a share price of $10, all right? So we're on page 28 here of the investors presentation of August. And as we can see, after the merger, there are going to be 338.8 million shares outstanding, okay? Now, the market cap, as you might know, is the total amount of shares times the share price, right? So what we can do is simply say, okay, we have 338.8 million shares outstanding, and we're going to take a share price, a base share price of $10. So if we multiply $10 by 338.8 million, we're going to get a market cap of $3.388 billion, right? So the pro forma market cap based on a share price of $10 is $3.388 billion. That's step number 1. Then step number 2 is going to be to calculate the pro forma enterprise value. Now, the pro forma enterprise value means basically how much the company is worth based on a share price of $10. So what we've done in step 1 was to calculate the market cap, which we've said was $3.388 billion, which we can see on the screen here as well, right? But Luminar is also going to have $488 million on their balance sheet in net cash. So to calculate the enterprise value, what we need to do is we need to take the market cap, which we've already calculated in step 1, and we need to subtract the amount of cash. And then we're going to have the enterprise value. So basically the value of Luminar, the company itself, right? So that is going to be quite simple because, well, the market cap was $3.388 billion. The amount of net cash is 488 million, so $0.488 billion, right? And if we subtract these numbers, then we're going to get an enterprise value of exactly $2.9 billion. So the pro forma enterprise value is $2.9 billion. Then step number 3 is going to be to calculate the current market cap and the current enterprise value. Now, as we can see in TradingView, the share price has increased from $10 in the beginning to what it is right now is $12.75. So that's an increase of 27.5%, right? So what I've done is I've put all the numbers that we have seen so far and I've put them in an Excel sheet. Now here in this list, in this column of before, is basically the pro forma shares, share price, the total amount of shares, the enterprise value, the net amount of cash, and the market cap, okay? So we've said that the pro forma value per share, the share price, was $10. We said there are going to be 338.8 million shares. We said that the enterprise value was going to be 2.9 billion. We said that Luminar was going to have $488 million in cash, and we've said that the market cap was $3.388 billion, right? But now, as we've said before, and as we've seen in TradingView, the price has gone up to $12.75, increase of 27.5%. So that means that our market cap has also gone up 27.5%, because if you multiply the share price of $12.75 and you multiply that by the amount of total shares outstanding after the merger, then you're going to have this market cap of about $4.3 billion. Now, to get the current enterprise value instead of the current market cap, we're going to take this market cap of 4.3 billion and we're going to subtract the amount of net cash that is going to be on the balance sheet of Luminar, which again is $488 million. So what you do is you take 4.3 billion, you do that minus 488 million, and you're going to get an enterprise value of around $3.8 billion. So according to the current share price of $12.75, the company Luminar would be worth $3.8 billion after the merger. Then step number 4 is going to be to calculate the future enterprise valuation. And for that, we're going to use the numbers that are provided to us by Gores Metropoulos and Luminar. This is on page 31 of the investors presentation of August 2020. And as I've said, Gores Metropoulos and Luminar have helped us out a little bit here. Now, first, before we begin, I want to give you a little disclaimer because we're going to use the assumptions of Gores Metropoulos and Luminar, okay? We're going to look at some numbers like the EBITDA multiples, which are going to be assumptions. The EBITDA numbers themselves are going to be assumptions, and the EBITDA margins are going to be assumptions as well. Now, if these assumptions are changing, if these assumptions change, then the entire calculations are going to change as well. So Gores Metropoulos and Luminar have calculated the future enterprise valuation based on the EBITDA of 2025. So according to Gores Metropoulos and Luminar, the EBITDA in 2025 is going to be $365 million, as we can see on the right-hand side of this screen over here. And they're going to have an EBITDA margin of 44%, which, by the way, is quite a bit higher than ChargePoint's expected EBITDA margin instead, right? So we're going to use these numbers, $365 million EBITDA in 2025. Now they multiply the 2025 EBITDA by 36 to 44, as we can see over here on the left-hand side. So why those numbers? Well, they say, as we can read here in the investor presentation, that they base this on the median EBITDA multiples of some of their competitors, or as they call them here, the Luminar's peer group, okay? Well, this is where you could disagree with Gores Metropoulos and Luminar, because what they do is they take the median EBITDA of companies like Nvidia, which we can see over here, and also Tesla over here, right? Which are not direct competitors, because their services, their products are quite different from the products and services that are delivered by Luminar. But yeah, for the sake of our calculations, we are going to stick with the numbers that were given. Anyways, the median EBITDA multiple is 40 times, yeah, 40x. And then they say, okay, what we're going to do is we're going to give ourselves a range or a margin of 10% on both ends, below the median of 40, so that's going to be 40 minus 4 is 36, and also 10% above the median, so 40 plus 4 is 44. So then Gores Metropoulos and Luminar say, okay, in 2025, we're going to have an EBITDA of $365 million, right? As we have seen before in the previous step. So $365 million, that's this number over here. And then they're going to multiply this by an EBITDA multiple of 36. So let's do that as well. And then you're going to have a future enterprise value of $13.14 billion, okay? Now, if we also take that number with a EBITDA multiple of 44, we're going to have $365 million times 44. Is a future enterprise value of $16.06 billion, which are exactly the numbers that are presented over here on the investors presentation as well. Now we are going to add one more valuation ourselves, which we're going to call the future midpoint valuation, which basically is the average of these two extremes that we have seen before, right? The $13.14 billion and the $16.06 billion. So what we're going to do is take these two numbers, 16.06 plus 13.14, and we're going to divide them by 2, which is going to give us a midpoint valuation, a future midpoint valuation of $14.6 billion. Which you could have also calculated by taking an EBITDA multiple of exactly 40 and multiplying it by the 2025 EBITDA of $365 million. So now we have a low future enterprise valuation of $13.14 billion. We have a high future enterprise valuation of $16.06 billion. And we have a midpoint future enterprise valuation of $14.6 billion. Okay, that was a difficult step, so I've taken another rebel. So we're still on page 31, right? So now, and in step 5, we're going to calculate the fair current enterprise valuation. That's a mouthful of words, but we're going to quickly see what that means exactly. So Gores Metropoulos and Luminar used a discounted cash flow method to determine the current enterprise valuation based on the future enterprise valuation we have just looked at, right? So what they do is they have discounted the future valuations, so the numbers that we have seen before, the 16.06, the 13.14, and the $14.6 billion, and they discounted those future valuations 4 years back at a discount rate of 20%. So how do you do that? Well, you take, for example, let's take first the high valuation of $16.06 billion, okay? Now we're going to divide this by 1.2 because of the 20% discount rate. And we're going to do that to the power of 4, okay? We're going to calculate that. And then it says that the implied current enterprise valuation, so by taking the 16.06 as a high future valuation, by using a discount rate of 20%, and by doing that 4 years, so 4 periods, then we're going to get a current enterprise value of $7.7 billion, which is exactly the same number as we can see in the middle of the screen on our investor presentation as well, right? $7.745 billion, which is like the high current valuation of Luminar. Then we can also do that with the low valuation, right? So we're going to take the low valuation of $13.14 billion, and we're going to do exactly the same thing. So we divide it by 1.2 because of the discount rate of 20. And we're going to do that for 4 periods of time. So that's going to give us a low current enterprise valuation of $6.3 billion, more or less, which again, we can also see on the investors presentation, $6.337 billion as a low current enterprise valuation. And then the last one is going to be our midpoint valuation. So as we've said before, well, the midpoint valuation of these two can be calculated by simply adding these two up. So 7.745 plus 6.337 is this one, and then we divide it by 2. So basically that's a midpoint valuation of $7 billion, $7.041 billion. So now we can see that, first of all, the low fair current valuation of Luminar is around $6.3 billion. The high fair current enterprise valuation around $7.7 billion, and the midpoint fair current enterprise valuation around $7 billion. Then step number 6, which is going to be to calculate the current fair market cap. So we've just looked at the enterprise value, right? The fair enterprise value. We've said, okay, midpoint enterprise value around 7 billion, low valuation, low enterprise value 6.3, high valuation 7.7, right? Now to calculate the fair market cap, we just need to add the amount of cash, the amount of net cash on top of the enterprise value. So the amount of net cash was $488 million, right? So for the low valuation, it's $6.3 billion plus, well, around $0.5 billion is $6.8 billion. That's the low fair market cap. For the high market cap, for the high valuation, it was 7.7 billion plus 0.5 is 8.2 billion market cap, and the midpoint enterprise valuation was 7 billion plus a net cash of 0.5 billion, gives you a fair market cap of 7.5 billion. And then finally, the last step number 7, is going to be to calculate the current fair price per share. Now, as we've said in the beginning, the market cap is the amount of shares times the share price, right? So if we have a fair midpoint market cap of $7.5 billion and we have 338.8 million shares, then the current fair price per share would be $7.5 billion divided by 338.8 million shares. And that gives you a fair price per share of $22.22. The low valuation would be $20.14, right, with a market cap of 6.8 billion, and the high valuation would be 24.3, so $24.30, with a market cap of $8.2 billion. And I've also calculated the growth versus the current share price. So the current share price is $12.75, and if you would get in at $12.75, then you would have an ROI, a return on investment, of around 74% if the price actually goes to $22.22. All right, so there you go. According to my calculations, the fair share price of Luminar would be $22.22. And that would give you a return on investment of around 74% if you would start a position at $12.75 and if the stock actually reaches a price per share of $22.22. Now, I want you to keep in mind 3 things. First of all, these are my calculations. I could be completely wrong. Never trust me, always verify. Then secondly, keep in mind that we had to do the calculations based on assumptions of Gores Metropoulos and Luminar. Now, it's in their best interest to keep these assumptions rather high so that they can attract more investors. And we can't really know for sure what is going to happen in 5 years' time, right? So you never know exactly what can happen in that time period. And lastly, also watch out if they are going to add more shares, because that would lead to share dilution. That basically means that if the value of Luminar stays the same, but you have more shares, that means that the price per share is likely to decrease. Alright, I hope you're still awake and I hope you found some value in this video. Now before you leave, what are you going to do with your shares? Are you going to sell before the merger? Are you going to hold for many years? Let me know in the comments and I'll make sure to answer. With that being said, thank you so much for watching and I hope to see you soon. Stay safe, bye bye.